In this episode, we begin laying out the map that will be used throughout this channel. Before any chart is interpreted, before any movement is described, there is a specific way the market is divided and observed here. This framework does not begin with direction. It begins with state. Because price is always moving, but structure is not always changing. Most of the time, markets are not resolving anything. They are balancing. They are rotating. They are spending time inside conditions that remain intact. That state matters more than any short-term movement inside it. So the first task of this framework is to recognize what kind of state the market is in, whether price is expanding or whether it is holding, whether volatility is being released or whether it is being absorbed, whether time is changing structure or whether structure is persisting despite the passage of time. To observe this consistently, the market is separated into three layers: time frame, session, and structure. These are not tools. They are lenses. Time frame establishes context. It shows where price has spent time and whether recent movement has actually altered the larger picture. Session introduces sequence. Because markets do not move as a single continuous day, they move in stages, with each session inheriting what the previous one left unresolved. And structure describes behavior, not where price went, but how it behaved while getting there. Whether price was accepted, whether it was rejected, or whether it simply continued to rotate, leaving the larger state unchanged. This episode does not resolve anything yet. It only defines how this channel will describe markets before resolution is even possible. Once the market is divided this way, observation becomes sequential rather than simultaneous. Nothing is observed all at once. The higher time frame is always addressed first, not to answer questions, but to establish what is already in place. It shows where price has spent time, which references still overlap, and whether recent movement has altered any part of the broader structure. Often it has not. When that happens, the higher time frame does not become less important. It becomes more restrictive. Only after that context is set does attention move to the session. Because markets do not move as a single continuous process. They move through handoffs. The Asia session introduces conditions. It defines an initial range. It creates references without asking them to resolve. Those references may remain untouched. They may be tested briefly, or they may be interacted with for long periods of time without anything changing. The U.S. session does not inherit direction. It inherits responsibility. It is where those unresolved conditions are tested through time. Sometimes that testing is active. Sometimes it is slow. And sometimes, despite hours of interaction, nothing resolves at all. That absence of resolution does not invalidate the session. It defines the state the market remains in. Structure is observed last, not as a pattern, and not as a signal, but as behavior that persists as time passes. Whether price spends time at a level or only touches it, whether volatility builds gradually or appears briefly and fades, and whether repeated interaction changes anything at all. This sequence does not provide conclusions. It only controls the order in which information is allowed to appear. With this map in place, the Foundation series follows a fixed progression. It does not accelerate. It begins by staying with market state. Before any expansion, before any follow-through, attention remains on balance. How long price remains contained, how often it rotates through the same area, and how structure continues to hold even as time passes. Balance is not treated as empty time here. It is treated as a condition where risk accumulates without being released. From there, Time itself becomes a structural input, not measured by the number of candles, but by tolerance. How long price remains near a reference, whether interaction increases or diminishes, and whether structure absorbs volatility instead of converting it into movement. Only after that do sessions become active stages. Asia defines conditions. The US session tests them. Sometimes that test is brief. Sometimes it stretches across hours. And sometimes, even after repeated interaction, nothing resolves. That delay is not avoided. It is observed. Volatility is examined next, not for direction, but for behavior, compression, expansion, and the way volatility can increase, while price remains contained. Acceptance and rejection are addressed last, not as instant outcomes, but as processes that unfold gradually through repeated interaction over time. This progression does not aim to reach decisions quickly. It is designed to remain inside uncertainty until structure itself changes. Episode 2 begins by staying with balance. Nothing resolves yet.